Thank you, thank you. Far too kind, crowd. Welcome to the big show. This is Investing with Confidence. As always, I am your host, Joshua David, and we are happy to have you with us today. As always, once again, my good friend, the mastermind of this whole operation, the stock master, Mr. Al Connickson. Al, how the heck are you doing today?
I'm feeling pretty good, Josh. How about you?
I'm doing really good. I don't know how many nicknames I have for you, but they're all pretty good.
So far, they've been positive, and I am appreciative of
That's
that.
the good thing is they are positive. We won't talk about what's going on behind closed doors.
You always have me a little bit worried.
Yeah, exactly. But it's always great to be back, Al, talking about the stock market and helping our listeners make better investing decisions. And we're going to talk about the stock market today. We have a great move in these markets. It's, I almost want to say it's starting to slowly roll over, which is concerning for me for a couple of reasons. One, most people aren't protecting what they have.
That's correct.
Two, this little rollover, really 7 or 8 days here out of 9 or so negative days in the markets, and it's been very quiet. The news isn't talking about it, media, and is this a sign? I don't know. But you know what? All it is a phenomenal opportunity for people that know how to short the markets, great opportunities for options traders, and we're going to talk about a lot of that stuff here on Investing with Confidence, sponsored by Online Trading Academy. And Online Trading Academy has been teaching people just like you for over 25, actually on their 25th year, how to utilize the markets for income potential. Now, that could be during your working years, during retirement years, 401ks, IRAs, any type of trading account. Doesn't matter what type of account it is, as long as it's in the market. Online Trading Academy teaches the skills to utilize those different markets. So, Al, we had great moves in the markets. S&P's obviously, Dow, NASDAQ showing some weakness here.
Right.
One nice, pretty good bounce back day here this week. That looked really nice. Friday, we know what happened there. But the dollar, that's been driving a lot of this big move up in the market, especially on Thursday. But we're coming back to a supply zone that we've been talking about for a few different weeks here. And as always, we talk a lot about cryptocurrency on the show here. And it's been kind of a mixed bag. We had a couple down weeks or so, and then we had a big spike last couple of weeks, and it's kind of slowing down a little bit. But you know what? These are great opportunities in these cryptocurrency markets, and this is the future. This is the internet of 1995. Yep. And Al, you help a lot of people here at Online Trading Academy get started in the markets. You talk about how to use the markets for income potential. But here's the thing. There's a big difference, a gap between the Wall Street and the novice investors. Let's talk about that. What's the gap? Why are the institutions always making money? How can we trade like them and not against them?
Well, you just threw out a whole bunch of stuff there.
There's a lot there.
There were about 10 things we could do
Too
a whole
much coffee
show
today,
on.
Al.
Yeah, but first of all, let me just get back to, you mentioned the term supply zone. That what we're talking about there is an area where we know there are a lot of sell orders just sitting in that zone that we call the supply zone, ready to hit the market to cause whatever that asset is to stop going up and probably start going down. So, and that's one of the things that we talk about in these classes. But, in 2020, Josh, there were 10 million new brokerage accounts opened.
10 million?
10 million just in 2020. Wow. And a lot of the people, probably the majority of them, did that with very little knowledge or maybe no knowledge at all as to how to invest. But what we have been seeing is a market that has led people to believe that it's just going to continue going up, that the Fed will always come in and boost it up. Whatever it takes, the market will continue to go up. Now what we're seeing in the last 7-8 days is that the market doesn't always go up. It can go different directions. Yep. It goes down, it goes sideways. And for a lot of people who are, especially the new investors who saw their accounts go up after they got in the market, now we're seeing that reverse. And for a lot of them, they don't know what to do.
They're buying the dips, and that always does not work. You have to have a strategy for both market conditions, up and down.
Correct, yeah. And the key to really being successful or having the opportunity to be successful is not to rely on one direction, to be multi-directional. In other words, know how to participate in the markets and the financial markets, whether they're going up, down, or sideways, beneficially to you. And that comes with the proper education, all of it wrapped around the proper risk management. So regardless of what you're doing, what you're investing in, whether you are investing in an up direction, down direction, or sideways direction, the number one consideration is to understand what the risk is and make sure that you know how to manage that.
How does Wall Street get into their trades? The institutions, are they just buying and just hoping like most novice? A lot of our listeners probably. How do they do that?
No, probably not. They're probably not hoping. They're not showing up every day, crossing their fingers, saying, I hope that what I bought goes up. The reason that they make these investments and the reason that they put so much money into them, it may be millions or billions of dollars into one position. Well, they know, they have analyzed these companies. They have contacts within companies. A lot of times they'll talk to the CEO, the CFO, so they understand what is going on. They have evaluated what's important. And if you want to try to do that, you can, but by the time you get the information, it's all public knowledge, and the institutions have already acted on it. Mm-hmm. So the bottom line is, if they are getting into a position on whatever the asset is, they're doing it because they know there is a good value there. And if the price moves away from that value area, they stop buying. They wait until the price gets back down there. And then conversely, they also know when something is overvalued. So that's when they will take their profits and move on to something else. The great thing for us is we don't have to do that work because they've already done it for us.
Yep.
If you think you can analyze something better than Goldman Sachs or J.P. Morgan, you probably want to rethink that position. But all you have to do is just follow and they're showing us what they're doing. They show us when they're making these different positions, whether it's getting into or out of something, so we can easily follow what they're doing.
Yeah, true success in the financial markets, as Al is talking about, is not relying on one direction. If you have one direction or one gear with your car, you're going to go one place and one place only. That's forward. You need reverse if you're going to park, if you're going to pull out of your garage or your driveway. Most people have to have reverse. So it's having both directions in a trading and investment strategy. And as I was talking about, the institutions, they analyze the stocks. They have all the millions and billions of dollars to pay people to do that stuff. What do? We want to follow them. They do the analytics for us. We follow them. We make our investment decisions with our plan. And that's the key as well,
right.
Is having
Keep
a
it
plan.
Simple and have a plan.
Yeah, they have a plan to get in investments. So can we. We can do the same things that they are doing at a much smaller scale, which is phenomenal because nobody's knows who we are in the markets. We can be like a mouse in the house.
Exactly.
Taking little pieces of cheese without the institutions really knowing who we are because we can't move the market. So now is the time to learn how to trade and invest like those institutions. Trade them. What's the difference between them and us? Actually, it's nothing. They have just been educated on it. Now it's time for our listeners here in Minneapolis to get educated. Learn the skills and techniques to get in the financial markets properly. Call 952-814-4410 for 2 tickets for an investing class right here in Bloomington. 952-814-4410. When you do that, I'm also going to give away our Cryptocurrency Foundations course. When you call right now, you're going to receive that and the tickets for the investing class. Al, what do you got coming up next?
Well, let's talk about why many times Wall Street advice omits the most important component for financial success.
That advice that Wall Street gives sometimes is not what we're looking for. How to make proper investing decisions, coming up next. 952-814-4410 for 2 tickets for the investing class and the Cryptocurrency Foundations course. This is Josh and Al. We'll be right back.